Hello traders, how are you? Happy weekend! Vladimir Ribakov here from Traders Academy Club, and this is a Forex weekly review for the week starting of 10th of December to the 15th of December. We can say this is the last official trading week for the year 2017. Still can't believe that time just gone and 1 year again behind us. It's really scary and amazing on the same time. The reason I say this is the last official trading week is because on the holidays period the volumes drop down. Of course the market is still open, not on the holidays themselves but on the week in between, but the volumes drop down. A lot of traders are on vacations, holidays, and this is mainly a period for short-term trading, scalping mainly. I myself never trade on such periods simply because there is no reason. I proudly can say that I myself stopped trading on the beginning of November simply because September and October were maybe the best months in 2017. That was enough for me, and as I always say, trading is not to trade as much as you can, but trading is all about take and make what you need, as much as you need. Be thankful for that and enjoy the freedom that trading allows. There is never a limit for how much we can get, and if we will keep fighting for getting more and more and more and more and more, we miss the main goal, and this is the freedom of trading and the fun of trading. We never can obtain everything, so why to try? So this is the weekly Forex review for the week of 10th to 15th of December. The non-farm payrolls week is behind us. This week might be the most important week of 2017, and of course the impact it will have on the 2018 that is coming. And I'm talking about the fundamentals event that we will have this week. It starts slow motion with the CPI in Britain, which was one of the main factors in the last several months. Every time it was published, it gave volatility and momentum to the pound and the pound pairs, the pound dollar and the pound pairs. Same might happen this week as well. Then we have the PPI from US, speech from Draghi, speech from Governor Lowe, and it warms up to Wednesday. This is the main event, like you know, in the UFC fighting, they say the main event of the evening. So this is the main event of the year, and we are talking about the statement from the FOMC, the cash rate decision, and the press conference that will follow right after that. The consensus is that the Fed is going to increase the rates one more time. That by itself is enough to boost up the dollar on the beginning of the week, which I will show in a few moments. But it also could be the trap, because if the Fed will stay behind the consensus and will not increase the rates, there is a massive chance that the dollar time is gone and the majors will go up and fly. So we will have to be very, very, very careful here. See the real fact and not just the real number, because the real number is what the market represents before the event, right? The expectation. So the chart basically represents the expectations from the traders and the investors. The main thing is that what will come out of the press conference to follow to the decision, and this would be on Wednesday. And of course we have another important news, but it's always on grade B, industrial production in China, which would be effective on the Pacific pairs and the yen pairs, employment change and the rate in Australia, Libra rate and the monetary policy assessment and Swiss, which was very, very important, a press conference to follow by the central bank there as well. Cash rate in Britain, they most likely would keep it on 0.5. They already increased it once, so they maybe will not rush to do and to take a step in action, especially not during the negotiations period. But who knows? Rate in Europe and retail sales and core retail sales in the US. That's going to be a massive week. So now it's time to go to chart and see how we can enjoy from that. One of the first pairs we have is the euro dollar, the pair we have been trading recently inside this range from the 120 zone. In the last couple of weeks we said we are going to be in a bearish mode. We are still in a bearish mode, but we must pay attention to what's going to happen on Wednesday, because this is, as you can see, critical action zone right now. If it blocks it right here, there is a great chance the euro dollar starts its journey towards the 122, who knows, maybe 124, 125 area, according to the weekly cycle. But if we break through this zone and this range marked here, the next doors that should be open for the euro dollar would be right here, and that could be the zone of 114, 113, and that could happen pretty fast. All depends, of course, on the events this week. So keep a close eyes on the euro dollar, which is very interesting. And this is how it looks like on the 4-hour chart. We have two cycles here, and this is why it becomes so critical. This is the first one, getting us very close to the 161.8, blocked right on the daily action zone. We don't have an action zone on the 4-hour chart, it's pretty far, but we do have a 200 moving average, and we do have 1, 2, 3 triple cycle, which belongs to the 1-hour chart. But that means that this is a very massive critical area, and it could start dance around it basically. So make something like that and down, or down and then up. The main event of the week, of the year, would be the event on Wednesday, of course. And according to that, the euro dollar should find its next decision. Or we are going to bounce, break the trend line and fly to new highs, or we are going to crash that retest and go all the way to the 113, 114. Keep an eye here, guys. It is massive opportunity. The next one on the list is the dollar versus the Canadian. The pair decided to move in the range. That was one of the options we've been following in the previous week. And from here, it's basically simple. It could go to the top, maybe even try to break it and false break and go all the way inside, or break, hold with the rate decision to come and retest and slowly take us towards the 133, 132 zone, which would be the 161 expansion of this cycle, and also a triple cycle by itself. So that's definitely a possibility, which, by the way, is a very serious possibility, because the weekly chart trend line is exactly where the 161.8 level is, right here. Okay, so we can easily see that this attempt climbing towards there, continuing with the bearish hidden divergence for new high, before we can discuss about any sells. If the top holds and bounce from there, maybe even false break, right, to attempt to break high and go inside, we can expect a serious bearish move. And again, this is kind of the things that should be decided with the news to be published. AUDNZD Kiwi is a massive opportunity from my point of view, because we've had triple cycle to the upside. I want to remind you that weekly and monthly are still bullish, so this is a great opportunity. And we have this one. Now we reached the 38.2. I suspect we are going towards the 50%, somewhere around 108.50, 108, where from we can start looking for the buy. So it's going to happen from one of these zones. I think we should get ready for buys, and we need to pay attention to the statistic. This is that's the statistics we have from the Crystal Ball. And look what we have here, guys. We have an action zone right here, and the next one right here, exactly where the cycle takes us to, right? And as per dates, we have the 10. So if it happens now and pullbacks, perfect. We mark this trend line, break above, and we become bullish. If it continues lower, then we have one more week approximately to stay bearish until we reach the 18 zone. 18 comes with 19, as you can see. 19 is weaker, but 18 is very powerful. So it's neither happening now at the beginning of the week, or we remain bearish for one more week. So then we can look to sell rallies and take us lower towards the 50% of the correction. Dollar yen did, well, what I suspected in the previous week, if you remember, guys, broke the level. Now, we are still inside the range. This is still a possible bearish hidden divergence. But with the news to be published this week, with the FOMC, if they increase the rates, we are most likely going to see the dollar yen taking us to new highs, 116, 117 or so for the cycle, or at least first of all to the top of the range. The only way to become bearish here again is the break of this trend line which we have here and gaining new lows, because if it doesn't, the fact it broke and holds currently, as for now, holds above this area, could easily hint for the further continuation. So I'll be very, very, very careful with bears. Unless we break the trend line and get new lower lows, then we can start talking about the massive sell. EURUSD has a great magnet zone right here. So if we could easily see that going and trying to climb higher towards the 159, 160. From there, I would expect the pair to create a top and create some massive bounce. Until then, well, we had one attempt for a false break. It was better seen on the 4-hour chart, of course. So I believe and suspect we could get one more high here. Basically that's all. If we do, that's what very important here. If the pair really managed to climb higher for us, it would be a very good opportunity to start looking for massive sells right from there. The next one I have on the list is one of the favorites, is the gold. If you remember the scenario from previous week, that was our move. We said if we break below, we gain a momentum. We expect it to go to 1240, which was reached on the previous week. It was a very great move. So the question is that over, or we're going to see that moving lower? Now, in order to trade that, let's jump to the statistics. Statistics suggest us a possible bottom on the 10s right at the beginning of the week, or we go to 15. So a few more days on the bearish side, definitely possible. To make it easier for a decision, we must start getting some kind of bullish sign. And that could be false break and then higher highs. Then we can start looking for drops and buys. Or we can look for, on lower time frames, for triple move to the upside, 1, 2, 3, 2 waves correction and a breakout. These two scenarios are the ones we need to follow in order to become bullish again. Before we have that, we don't really have a reason to go buy just a level. Do you just want to trade a level without a setup? Not a smart idea. Silver is right on the bottom of the range. So basically, from my point of view, from this area or slightly lower, which still could happen, of course, we should, exactly like with the gold, start looking for the possible setups to the upside, like false breaks, for example. Natural gas, from my point of view, is approaching to a massive opportunity for buys. It is still on a weekly range here, massive area. We have some magnet zone right there. I think from here we are going for a big fly. So stay tuned. It's going to come and happen. And we are here now on the cryptocurrencies. Bitcoin, the beast, the unstoppable beast, crossed the 16,000, kissed the 17,000, and now making some kind of a bounce here with the new extreme. And as I said on previous week, every time we have extreme, we have short-term retraces. My view was and remain the same. Every 2 waves down, the deeper they are, the better is opportunity to go for buys. For one reason, not that the crash cannot happen. It can happen because too much money got involved too fast. And this fact by itself could make here a bearish impact. But the reality is it's limited. The demand is increasing. The supply is dropping. the interest and the exposure is growing. So for the very long run, most likely, unless there will be some crazy development by the government, which I don't see, by the way, it's most likely unstoppable for the very long run, and there is a great chance we are going to see much higher levels. I'm not going to get you busy with some exposure and some prediction for the very future, but let's say that if it stays as it is without any crazy surprises, the simple fact of supply demand just by itself puts the pressure for the long run, and add to that the fact that that could become a new economy and you get yourself an opportunity. Ripple is one of my favorite, as you know, for an investment, and for trading we better get above the triangle, two waves retrace or a pullback and breakout of the range. We can start looking for the buys. I see there great opportunity for the future. Ethereum did a two waves retrace here, and on the lower time frames we got a trend line and we get a rally. Everything around the 500 psychologically could put the pressure, but exactly like with the Bitcoin, every two waves down from my point of view is a buy opportunity. We had two waves here, we had two waves here, we had the waves here, we had the waves here on the 4-hour chart, and every such opportunity is a buy to try and to join the volatility. Now many traders really, where is that? Oh, this is sorry, this is my last chart. Many traders try to find technical reasons to trade the cryptocurrencies. From my point of view, I might be wrong, of course, but from my point of view, it's not yet technical. It's very volatile because of the interest, because of so much money is involved, and the volumes constantly increased. Some rumors about taxes and everything put the pressure, but on the short term, that could be even the fact to get it higher, right? So the higher we can go before governments will put their limits. So it can boost up the things, volatile strategies to enjoy this volatility, like the Scorpio, like the SRS, like the Triple B, to ride these opportunities. That's the list of my strategies, are great for these reasons, exactly because they allow you to ride the craziness with pretty safe setup. That's basically the entire idea, and that's all. So enjoy it. Unless you want to go for investment, don't look at it on the short term. Look at it only for years to come. Or if you are just for trading, then simply stick to the intraday volatility. Two waves down, breakouts, two waves down, breakouts. Some might fail, but those who pay unlimited to the upside. And that's the beauty. That's the beauty of volatility. We don't need technical reasons, we need moves. The setup can be as technical as possible, but if it's simply not moving, we can't make money, right? Think about it. If we buy something at price X and after amazing setup and 1 month from now it's still on price X, we can't make money. So we make money on volatility, and currently, let's admit it, the volatility is exactly here. That's all for today. That's all for 2017. This is my last weekly review for this year. I'll see you, of course, in 2018. I will see you with the annual forecast and on the next year with more of my videos. If you enjoy my video, hit the like button. It helps a lot. Leave your feedback. Let me know what you think about my videos and my analysis and my trades, my setup for you guys on 2017. And thank you. Mainly thank you for your support, for keep watching me, for giving me the chance to share with you what I know and what I know to do the best. Thank you for trusting in my analysis and for going with me all this journey together. I wish you the best holidays period. I wish you an amazing rest, and I wish you and your loved ones health, wealth, freedom, and happy life. Thank you once again for everything. And if you can, if you have time, leave your feedback below. It's really important to me to know how it helps you, if at all. And I'll see you soon. Thanks again for everything. Happy holidays of 2017. Yours, Vladimir Ribakov, Traders Academy Club.
Thank you for watching. We appreciate your time. We invite you to join the #1 ranked trading club online, the Traders Academy Club, and to start trading like a real professional. Our students make amazing returns, and you can do too. Let your successful trading journey begin. Join Traders Academy Club using the link below this video now.